Hey everyone, welcome back to Corporate Decoder, where we uncover the hidden stories in corporate reports. And today we have a fascinating look at Prudential Financial Inc., a company that has been a bedrock in the financial world. We're diving into a Form 8K filing from December 2025. Now, an 8K is a report of major events that shareholders should know about. Think of it as the company's way of saying, hey, something important just happened and you need to know. And this one doesn't disappoint. It has got a key leadership change and some important financial details about their notes. So the big news breaking on the 18th of December 2025 is that Caroline Affini, who was the Executive Vice President and Global Head of Retirement and Insurance, is leaving the company. Now, this isn't just a simple resignation. Her position is actually being eliminated due to an internal reorganization. This tells us that Prudential is shaking things up within its senior leadership, particularly in the retirement and insurance divisions. She'll be sticking around until early February 2026 to help with the transition. This kind of executive shuffle often signals a shift in strategy or a move to streamline operations. And for a company like Prudential, which deals with retirement planning and insurance, these are critical areas. Following up on that leadership news, the company also released a press statement on the 18th of December to make sure everyone in the market heard about this leadership change. This is what is called Regulation FD disclosure, which is all about keeping information fair and available to everyone at the same time. Now let's talk about the money, or more specifically, the debt that Prudential has issued. You'll see a nice clear table here listing their various notes, which are essentially loans the company has taken from investors. We're looking at their common stock, which trades under the ticker symbol PRU on the New York Stock Exchange. Then there are several sets of junior subordinated notes. This sounds a bit technical, but it just means these are loans that are lower in priority than other debts if the company were ever in financial trouble. We've got the 5.950% junior subordinated notes trading as PRE-H, the 5.625% junior subordinated notes trading as PRS, and the 4.125% junior subordinated notes trading as PFH, all also listed on the NIAS. These are important for understanding the company's debt structure and how much it is paying in interest to fund its operations. A company uses these different types of debt to manage its overall cost of borrowing and its financial flexibility. And finally, this report includes a couple of exhibits. Most importantly, we have a news release from the 18th of December 2025 that elaborates on the leadership announcement. They also include what is called a cover page interactive data file, which is basically a machine-readable version of the report's key information, making it easier for financial systems to process. What does this all mean for Prudential Financial Incorporated? Well, the departure of a senior executive in charge of retirement and insurance, with their role being eliminated, suggests a strategic realignment. They might be consolidating divisions, changing their focus within these critical areas, or perhaps looking to cut costs. It's a move that signals change at the very top. On the debt side, seeing these different junior subordinated notes listed on the stock exchange tells us that Prudential is actively using the capital markets to fund itself. The interest rates on these notes, like 5.950%, 5.625%, and 4.125%. Give us a snapshot of what it costs them to borrow money. These rates are influenced by a lot of factors, including the overall economic climate, interest rate trends set by central banks, and of course, Prudential's own financial health and creditworthiness. For investors holding these notes, these rates are their return. For Prudential, they are the cost of doing business and a key part of their financial strategy. When we look at companies like Prudential, which is a giant in insurance and financial services, every executive change and every piece of debt issuance is a signal. Is this reorganization a sign of proactive adaptation to a changing market? Or is it a reaction to underlying pressures? The elimination of a role suggests a significant restructuring effort is underway. While we don't see the detailed financial statements in this particular 8K, the mention of these notes is a reminder that Prudential, like many large financial institutions, relies on a complex web of debt and equity to operate and grow. To wrap up, this 8K filing from Prudential Financial Inc. tells us about a significant leadership change signaling internal restructuring and provides a clear view of some of the debt instruments the company uses. It is a snapshot of a company in motion, making strategic adjustments in its executive ranks. Now, what is your take on these executive changes? Do you think this reorganization will strengthen Prudential, or is it a sign of challenges ahead? Share your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth looks into the world of finance. And don't forget to join our Discord community to continue the conversation. Thanks for watching.